I do recommend that for people that buy Bitcoin, you should try to self-custody it, right? So a
Right.
broker holding something in like a GBTC or a MicroStrategy is if you have a brokerage, sometimes those are your only options. I do
Mhm.
think we should have a spot ETF in the United States, but whenever possible, people should try to self-custody and own their own Bitcoin, which of course I do as well.
But until we hear from Alden, if you're new to the channel, be sure to subscribe if you haven't already, so we will provide daily content to keep you updated on the latest news. In an interview with the Paul Barron Network, macro analyst and investor Lyn Alden discussed her thoughts on the recent Bitcoin rise. Alden predicts that Bitcoin will do better than companies like Tesla and Apple in the near future, but speculates that it may still have further to fall. Alden thinks that if we haven't already reached it, we are in the process of doing so. When it comes to holding above the $21,500 mark that the bulls are hoping to trade over, Bitcoin is now trading for $21,014, up 11 over the past 7 days. Alden thinks that the main challenge Bitcoin is currently facing is its relationship with liquidity, and with sufficient liquidity, a Bitcoin bull run might occur. Let's hear what Lyn has to say about this.
So Bitcoin is historically highly correlated with various liquidity indicators, right? So basically, how much capital is kind of available, liquid for investment. A lot of other investments, they trade off things like earnings, they trade off all sorts of other things, whereas Bitcoin is actually one of the purest liquidity correlations that are out there. And ever since autumn of last year, liquidity conditions have actually been, in many cases, moving up or sideways a little bit. Basically, they declined all throughout 2022. When you got to the end of the year, the dollar index came off of its highs. You started to get Chinese reopening. You started to get, the market pricing in slower forward Fed hiking. Inflation was off of its highs. You had a drawdown in the Treasury General Account. It's kind of jargon for some, but basically, there's a bunch of things that improved liquidity. And I actually think that Bitcoin probably would have bounced in Q4 if not for the whole FTX implosion. Because you started to see a bounce in a number of risk assets. We saw good movements in precious metals, including ones like silver, that are historically more cyclical. And so I think that basically this is kind of a pent up move from those overall better liquidity conditions. I think the somewhat concerning thing is that you're also seeing a bounce in like meme stocks
Mhm.
and unprofitable stocks this year. And so, I wouldn't be surprised to see some of this be given back or some of this, consolidate for a period of time. But essentially, I think that, liquidity, at least locally, reached its worst point last year, and at least is kind of a mild, improvement. So I think that's going to partially depend on how adamant the Fed is in trying to tighten in the face of decelerating data. I think in most market conditions, this would probably be like a top in the dollar, and we'd see more easing conditions from here. Like historically, for example, when you see the 2-year Treasury roll below the Fed funds rate, usually the Fed is done hiking. And so, in normal market environments, these would probably start to signal a top. Now, because inflation is still historically high, because Jerome Powell has tied his reputation to getting inflation back down,
Right.
they could be a little bit stickier than they have been in prior cycles. So it's possible that we'll retest this. It's possible that we'll experience more turbulence. But I think this is at least the beginning of a rotation in liquidity, even if it's maybe not the final move. If you look at past inflationary periods like the 1970s and the 1940s, they often came in waves, and that's because policymakers and central banks don't just sit there and let it happen. Central banks try to push back on it. They try to tighten conditions, or sometimes you have policymakers doing things like price and wage controls. That was a historical move that would happen, and so between different types of levers that different types of policymakers can pull, they usually get a handle on inflation for brief periods of time before it runs away from them again. And so right now, as they try to curtail demand, as they basically suppress marginal demand, that helps bring inflation down. We also don't see, I mean, money supply was growing very quickly in 2020 and 2021. Basically, it was the fastest pace of broad money supply growth since World War II. But over the past 12 months, you're flat to negative in terms of broad money supply.
Right.
And so I would expect to see continued disinflationary pressures until there's a policy shift, in response to recession, in response to economic softness. And then probably from there, we would have another wave of inflation because some of the underlying shortages in energy supply, for example, are unresolved, even though they can be temporarily suppressed. But I think it's healthy to go through these cycles and clear out all these malinvestments because if you just always go up, of course you're going to get more and more leverage piled up. If you saw an investment that only ever goes up, the rational thing to do would be to leverage, right? If you were sure that it was only going to go up. And so the only way that something can go up structurally is that it has to clear out a lot of that debt every once in a while.
Right.
And so basically, I think we still have a process to go through. If you look at historical Bitcoin bottoms, they usually, other than the March 2020 event, usually you don't have these V bottoms. Usually you go down, you crash, you
Right
capitulate, you go
there.
sideways for a while, and you correct both in space and time, and you clear all that out for a while, and then you start to build, right? So I do think that, even though we potentially have seen the lows, I still think there's time to go through before you'd see another just super strong kind of structural rally to new all-time highs. So often what I do is rebalance based on conditions. So ever since springtime of 2022, and when the economic data was clearly decelerating and the Fed was clearly intent on causing that deceleration, I basically made the point that you want to be in cash, you want to be in gold, you want to be in defensive value stocks, things like healthcare, things like energy
Right.
pipelines, things like that. That was kind of like my core position. That type of investment has outperformed, whereas, for example, more cyclical things like Bitcoin have underperformed. A lot of leverage has wiped out. I do think that going forward, some of these cyclical um, things are getting interesting. So, for example, I've been banging the table a little bit on banks. I think banks are somewhat oversold here. I also
Okay.
do think that Bitcoin is kind of in a deep value zone after so much capitulation. So I'm a lot more constructive on some of these, more volatile type of investments. It doesn't necessarily mean that I think the bottom's 100% in,
Right.
but I think that it's either in or that we're at least in the later stages of these types of drawdowns for those types of assets. Whereas I'm still quite concerned about, for example, the Teslas and the Apples of the world. I do think that they could have poor, say, 5-year returns compared to, say, something like bank equities or something like Bitcoin that I expect to do better. So overall, I have been emphasizing that mix. Basically, on one hand, you have the
Right.
conservative cash flow producing assets, and then I do take certain risks in emerging markets or Bitcoin that are historically more volatile, and I'm essentially staying with that position and just leading into things that I think have maybe already had a lot of their downside done. And touching on Grayscale, so that particular portfolio is at a particular brokerage account, whereas, for example, I do recommend that for people that buy Bitcoin, you should try to self custody it, right? So a
Right.
broker holding something in like a GBTC or a MicroStrategy is if you have a brokerage, sometimes those are your only options. I do
Mhm.
think we should have a spot ETF in the United States, but whenever possible, people should try to self custody and own their own Bitcoin, which of course I do as well.
Do you agree that price doesn't matter in the short term? Leave a comment if you found the content interesting. Click in like button. It really helps the channel find viewers similar to you. If you're new to the channel or haven't subscribed to it, click in subscribe button. We post content daily to keep you up to date on the current market and news. Thanks for watching. See you in the next video.